Hello guys, I welcome you in today's wonderful video. I'm just going to be sharing with you how to use indicators correctly, because we have a lot of traders today who criticize indicators and they prefer to use pure price action because they've tried using indicators in the past and the indicators proved to be useless. However, they are not useless. It is simply a matter of knowing how to use them. Because for us to make better decisions in our trading, we need a lot of information, and some of that information is hidden in these indicators. So once you understand how to correctly apply them in your trading, your win rate is going to increase, your accuracy is going to increase, because the candles, they do carry information, but they don't carry the whole information that you need to be a good analyst. So let us just get into it without wasting any time. If you can see here, we have an interesting downward move. It was initially an upward move, and then some kind of a reversal came in. Then we have now some kind of a downward move, because obviously we can tell through these highs which are getting lower and the lows which are also getting lower as well. So if you can see here, as a trader or as a price action trader, you might start looking for selling opportunities maybe all the way from this area around here. Why? Because obviously you can't get an entry there, because that was the first high, which was a little bit lower than the previous one. So it was going to be hard for you to find an opportunity here. The right place to find an opportunity was somewhere around here, where this main trend was obviously broken. Let me just put the trend line all the way there. It was broken and retested as well. And you can see that when you start looking for opportunities, what you'll do is that you'll observe your price action. Let's say you observe maybe this corrective pattern going up, this minor pattern, and you see that okay, it becomes broken. As soon as it becomes broken, there is a small retest as well somewhere around here, and then let's say you begin to enter your trade as a sell. What you need to know is that someone who uses maybe this relative strength index to kind of confirm his trades, you need to know that it will be hard for him to say, I'm gonna make a selling opportunity here. Why? Because the way traders apply indicators is that they use indicators as some kind of a bounding tool, meaning he will not be able to say I'm selling here, because he will look at this relative strength index and say, the RSI is not above that 80 zone, it is not yet overbought, so I'm not gonna be selling because the price might be going up anytime soon. However, the right way to apply these indicators, or the correct way to apply these indicators, it is not some form of a bounding tool or a tool that you are gonna be using to say make a selling decision or to make a buying decision. You shouldn't use the indicators for those purposes, but you should use them as some kind of a sign or a signal telling you to be ready for something. What am I talking about? Here we can see that we have that high, which is beautiful, higher than the previous one, obviously confirming the strength of the buyers. And as we see that high, we have something interesting in the relative strength index. You can see that it is now above the 80 level, telling us that okay, now price is overbought. So price, if it's overbought, it means that price is likely to reverse. So what you should be doing as a trader is not saying that because the RSI is here, I'm gonna be selling all the way up there, or because the RSI is down here, I'm gonna be buying. What you should interpret it as, some kind of a warning that hey, be careful, price is likely to go down, or price is likely to reverse. So meaning you should wait and observe some kind of patterns which signify a reversal. We can see that the indicators told us about some potential reversal all the way there, but the only place where we were able to find an entry, it was somewhere all around that area there. Why? Because as I explained earlier, we couldn't find an entry even there, we couldn't find an entry even then. So you as a trader, you interpreted these signal as some kind of a warning that hey, be careful, meaning if as a trader, because some traders were gonna see this minor move going up as some kind of a buying opportunity, because it was still an uptrend, so they were not gonna interpret this breakout as some kind of a breakout that signify a reversal. They were just gonna say no, this is some kind of a fake breakout, and then they were gonna take this opportunity as a buying opportunity, and then they suffer their losses. But you, because you observed the indicator and used it as some kind of a warning, you were likely to reject this temptation to buy here, because the indicator already told you that hey, we are like to see some kind of a downward move, because even the indicator is giving you some kind of lower highs. Ne? So I hope this is making sense. When you apply the indicator, use it as some kind of warning or as a sign to tell you that, hey, be careful, something is about to happen. Another good example, it is here. Let's say you sold here as a trader and you're some kind of a short-term trader or an intraday trader. Ne? You make your selling decision there and you want to exit as soon as possible. You observe that the RSI is now getting oversold. It's telling you that prices are oversold somewhere around here. It was gonna be easy for you to say, okay, I'm now beginning to look for an entry technique somewhere around here. Not actually that, okay, I'm just gonna be closing my trade there and there, although you can do it that way, but you need to know that it'll sometimes you'll find yourself losing good trades or losing a lot of money because you just simply reacted from an indicator. But you should treat it as a warning. For an example, here we see that it enters that zone of oversold. Ne? Then what you should do as a trader is that, okay, I will wait now for the price to show me signs that it is indeed oversold. Ne? So meaning when price start to go up here, this is the exact area where you're gonna say, okay, now I'm exiting my trade. So at least you didn't exit your trade all the way there, but you're able to exit somewhere around here. Ne? And it saved you a lot of money. You can see the difference here. So I hope this is making sense. Interpret this indicator as some kind of warning or some kind of signs, not actually as an entry command. Now, when you see the indicators telling you that it's overbought or it's oversold, doesn't mean that just press the buy button or press the sell button. This applies to all the indicators. Just use them as some kind of warning and try to add and implement it with your price action or with that strategy that we are using. So I'm just going to keep it short and leave it here. Thank you guys for watching.